Welcome back to Trader DNA, and today you're about to witness one of the most mind-blowing trading systems that every serious trader has been waiting for. I'm not joking. This strategy is absolutely insane. We're combining three powerful indicators: the exponential moving average, EMA, the commodity channel index, CCI, and the MAGIC-GRAIL, and together they'll help you see the market like never before. But before we dive into the full combo, I'm going to reveal something crazy that most traders completely overlook, and it starts with how you set up your EMA. Trust me, if you get this wrong, your entire strategy could fail. But if you get it right, the results can be ridiculously accurate. Alright, let's not waste time. We're starting with a real chart right from January 2022. Look at this. As soon as the price breaks above the EMA line, I'm using here, boom, the market surges upward with confidence. Then suddenly price drops, crashes through the EMA, and guess what? The trend instantly flips bearish. Every time price tries to come back up near the EMA, it just bounces right back down. The EMA is literally acting like a trend guardian. Then, just when you think it's over, the price breaks above the EMA again, and just like magic, the trend flips bullish. And the same rule applies. When price gets close to the EMA line, it bounces up again because the market respects this level like crazy. This EMA is not just a moving average, it's like a trend detector telling you exactly when things are shifting. And get this, even up to the day I recorded this video, the market continues to follow the EMA's lead. When price touches the EMA, it either bounces off with power or breaks through and completely changes direction. But wait, why does this even work? Why does the price respect the EMA line so perfectly, like it's some kind of invisible force controlling the market? Well, here's the secret. It all comes down to using the right EMA settings. Yep, I'm talking about the exact period setting that makes the EMA laser accurate. The kind of setting that professional traders guard like it's a treasure map. And guess what? I'm not just going to tease it. I'm going to show you the secret sauce. I'll walk you through exactly how to find the perfect EMA setting that the market consistently respects. No more guessing, no more copying random settings from people online who don't even test their stuff. I'm giving you the real method, step by step. Once you learn this secret technique, it's like putting on glasses and suddenly seeing the market in HD. You'll stop asking, what's the best EMA setting? Because now you'll know how to discover it for yourself every time in any market. But that's not all. We're just getting started. Because when we combine this super accurate EMA with the CCI indicator and the MAGIC-GRAIL, you'll have a system that tells you exactly when to enter the market, when price is just bouncing off the trend, or when it's about to explode in a whole new direction. So let's get to it. The first piece of this puzzle is the CCI indicator. I'll break it down step by step and show you how it becomes your secret weapon for sniper accurate entries. This tool can literally spot major price shifts before they happen if you know what to look for. Here's the crazy part. The CCI was created back in 1980 by 𝗙𝗥𝗪𝗡𝗟 to track trends in commodities. But over time, traders discovered it works beautifully across all markets and all time frames. And that's why two major groups have emerged. One group uses it to follow trends, the other to predict reversals. And in this video, we're diving into both. So grab your notepad, smash that like button to support this channel and stick with me, because by the end of this video, you'll know exactly how to turn these three indicators into your ultimate trading weapon. Let's dive in. So here's what the CCI actually does. It helps traders figure out how strong a trend is and where the market might be about to reverse. Think of it like a radar that scans the market and says, yo, something big might be about to happen. Visually, it's super simple. On your chart, the CCI appears as an orange wavy line that moves above and below a center line, the 0 line. And that line, that's your neutral zone. When CCI goes above it, boom, it's telling you the market might be heating up. When it drops below, the market might be cooling off. But wait, it gets even better. There are two more super important lines, -100 and 100. These are your danger zones, also known as the overbought and oversold levels. When the CCI line jumps above 100, it's flashing a warning. Hey, the market might be overbought. A reversal could be coming, and when it dives below -100, it's like, yo, this thing's probably oversold, get ready for a possible bounce. Now, I know what you're thinking, this sounds like RSI, right? Wrong. While they might look similar, CCI and RSI are totally different beasts. RSI measures momentum based on price changes, but CCI is focused on how far price moves away from its average, which makes it incredibly powerful for spotting trend strength and turning points. So when you combine all of this, the oscillating line, the neutral zone, the upper and lower bands, you get a high-powered trading signal machine. It helps you time your entries and exits with scary precision. And don't worry, we're just getting started. Stick around, because next I'm going to show you how to actually use CCI to find winning trades, even if you've never traded before. Alright guys, listen up, because I'm about to show you two insanely simple but powerful trading strategies using the CCI indicator, and I promise this stuff is going to blow your mind. First up, let's talk about a method that comes straight from the guy who created the CCI himself, Donald Lambert. It's super beginner friendly but packs a serious punch. Here's how it works. You've got this orange line called the CCI line, and it moves up and down between two key levels, +100 and -100. Think of these like the green and red lights of trading. When that CCI line crosses above +100 and boom, it's go time. That's your signal that the market is heating up and buyers are stepping in hard. The uptrend is gaining strength, and it's your chance to consider jumping into a long position. It's like catching a wave right before it takes off. But it works the other way too. When the CCI line drops below -100, it's a big warning sign. That usually means sellers are taking over, momentum is dying, and the price could start falling fast. So if you're holding on, that could be your key to exit or go short if that's your game. So in plain English, above +100 calls strong buy signal. Below -100 calls strong sell signal. It's that simple, fast, clear and deadly effective. Guys, if you've ever felt lost trying to figure out if the market is going up or crashing down, this part is going to blow your mind. Because we're about to add a simple but powerful trick that separates amateur trades from pro-level sniper entries, and it all starts with the moving average. Now listen closely. This is one of the easiest ways to instantly boost your accuracy. You've probably heard of the EMA or exponential moving average, right? But did you know the secret isn't just using it, it's using the right one? I'm talking about the 200 period EMA, 100 EMA, even the 50, 34 or 20 period EMAs. Each one acts like a trend detector, but only one fits your trading style perfectly. And in this video, I'm going to reveal how to find your perfect EMA. Here's how it works. When the price is moving above the EMA, we know we're in a bullish trend. That means forget about short, forget about guessing, just hunt for buy signals. And the moment the price falls below that EMA, boom, bearish trend confirmed. That's your green light to only focus on sell setups and completely ignore those fake out buy signals. Now let's take it to the next level and combine this with the CCI indicator. Things get wild. So imagine this. The price is above the EMA, showing a strong uptrend. Then CCI crosses above +100, that's your cue. Go long. Everything is aligned. The trend, the momentum, the confirmation. It's like the universe is screaming, buy now, flip the script. The price is under the EMA, trend is down, and the CCI crosses below -100, that's your supercharged sell signal. And you're ready to ride that trend like a pro. By doing this, we're not just following indicators, we're stacking them like building blocks. Trend confirmation from EMA plus momentum signal from CCI equals one of the deadliest combos in trading. So remember, when you filter your trades using this strategy, your win rate goes up, your confidence explodes, and most importantly, you stop second guessing your entries. Alright guys, let me show you one of the biggest secrets in trading that almost no one talks about. Choosing the perfect EMA period. That's right, getting this one setting wrong could make your strategy completely useless. But getting it right? Game changer. Now you've probably heard of EMA. Exponential moving average, and sure, it sounds fancy, but here's the truth. It's just a line that helps you figure out which direction the market is trending. But, and this is a big but, the real magic lies in choosing the right period for that EMA. So how do we find a perfect EMA period? Simple, but powerful. Watch how the price reacts to the EMA line. You're looking for clean, clear bounces off the line. If price hugs the EMA like it's a magnet or reacts like it just hit a wall, that's your golden signal. That's when you know the EMA period is working. Let's break it down. We start testing with the 20 period EMA, then try the 34 period, then the 50, 75, 100, 150, all the way to 200 period EMA. Yes, we test one by one and we watch. Does price reject it cleanly? Does it bounce off consistently? If it does, boom, you found the one. In our test example, the 100 period EMA gave us the cleanest reactions. Price respected it like a king, so that becomes our EMA setting for this chart in this time frame. But here's the twist. Just because 100 EMA worked here doesn't mean it'll work everywhere. Different markets, different time frames. You've got to repeat the process. That's why there's no universal EMA setting that works on all charts. You need to adjust it to fit what you're looking at. And if you don't do this, you're just guessing. But if you do, you're analyzing like a pro. And that's how you win more trades. This is where things get seriously next level. We're diving into one of the most powerful tools in trading, the moving average. And trust me, once you learn this secret about multiple moving averages, you're going to feel like a total trading pro. I'm not even kidding. After this, you won't ever need to ask anyone ever again, hey, what's the best moving average setting? Because you will know exactly how to choose the right setup for any market and any time frame. This is the part where you go from beginner to boss level. Okay, look at this chart. See these three moving average lines? Yep, all three of them are respected by the market, and I mean really respected. The price doesn't just walk past them like they don't exist. It reacts, it bounces, it turns, it hesitates. Every single one of these lines plays a role, and none of them are useless. They act like invisible walls, powerful zones where the market either stops, reverses, or launches like a rocket. Let's start with the 50 period EMA, this one right here. But it's not magical just because it's the number 50. That number just happens to be the result of testing and analysing this specific chart and time frame. In this case, 50 is working like a charm, but in other markets or time frames, it could be 40, 34, 30, even 20. What matters is the behaviour of price around it. Now check this out. Here, price drops and hits the 50 EMA, boom, it bounces up. Then again, another drop, another bounce, and again, another touch and price launches back up. This EMA is acting like a magnet and a trampoline at the same time. The market hits it and springs right back. So what does this mean for you? Here's the golden takeaway. If price is moving down and comes close to that 50 EMA, and you start seeing signs that it might bounce again, you get ready to buy. Why? Because you're not guessing, you're reacting to a proven support level that the market has already respected multiple times before. This isn't just about knowing where the line is, it's about knowing what it means when price touches that line. When the market respects the 50 EMA like this, it becomes your high probability buy zone. It's like having a radar that tells you, hey, something big might happen here, pay attention. So get this burned into your brain. The moving average is not just a line, it's a weapon. And once you learn how to use it properly, like we're doing right now, you'll stop feeling lost and start trading with actual confidence. Now let's kick it up another level with the 110 period, and this one is a total game changer. Look at this. Every time the price dips and touches this 110 EMA line, boom, it bounces back up right here, bounce, and again over here, bounce, and here, yep, another bounce. It's almost like the market is treating this line as a second line of defense, a backup wall when the first one breaks down. So here's the big takeaway. If the price breaks through the 50 EMA, remember our first defense, then your eyes need to immediately go to the 110 EMA. Because this is the spot where the market has a high chance of bouncing back again. It's like in a video game. If the first shield breaks, the second one might still save you. And here's where it gets even cooler. This chart isn't just respecting one line, it's respecting two major zones, the 50 and the 110. That tells us the market structure is super clean and it gives us multiple chances to enter with high probability signals. That's powerful. But hold on, we're not done yet. Now we bring up the bid boss. Yeah, you heard me right. Not 200, like every other trading guru keeps saying, but 250. Why 250? Because we're not guessing, we're using actual analysis, not magic numbers. This number came straight from testing this chart and time frame. In other markets, your numbers might be totally different, and that's okay, the method stays the same. Now check this out. Price falls below the 110 EMA, and where does it go? Right down to the 250 EMA, and then boom, price rebounds again like it hit a trampoline. Right here and here, instant reaction. It's like the market is saying, all right, this is the final line, don't go any further. So here's what you need to remember. If price breaks the 50 EMA, watch the 110 EMA for a bounce. If price breaks the 110 EMA, look for a bounce at the 250 EMA. But if the 250 EMA breaks, that's your big warning sign. The uptrend could be over and we might be flipping into a bearish trend. Simple, right? Way easier than all those overcomplicated systems being sold out there. No Fibonacci spaghetti, no confusing wave theories. Just clean, logical, visual evidence from the chart, and it works. And the best part? Once you understand how to find your own moving average combinations like this, you can build your own trading robot or expert advisor to automate it. That means the strategy keeps working even when you're asleep. So yeah, this is more than just a setup. This is a blueprint. You're not just learning how to use EMAs, you're learning how to dominate the market with them. Remember, the numbers 50, 110, 250 aren't magic. What's magic is your ability to read price behavior and adapt the EMA periods to match the chart you're working with. If you've made it this far, congratulations. You're already ahead of 90% of traders out there. Keep going. All right, guys, this is where things get next level crazy. You've already learned a core of how the CCI works. You've also seen the power of the EMA, the exponential moving average, and how the market literally respects these lines like they're sacred. But now it's time to combine them. This is where the real magic happens. When we use CCI together with EMA, we unlock the ability to time our entries with sniper precision, and I'm about to show you exactly how it's done. Let's dive straight into our first real case study. Here's what we do. Step 1. We select the right combination of EMA lines. And no, we're not guessing. We've already done the analysis at the beginning of this video to find the best settings. In this example, we're using 3 EMAs, the 60 period EMA, the 125 period EMA, and the 250 period EMA. These are not random numbers. These are powerful tools based on how the market actually moves. Now look closely at the chart, you'll see how the price behaves around the 60 period and 125 period EMA lines. It's wild. The market consistently respects these levels. The price literally bounces off them like it's hitting a wall or a trampoline. That's why we call these two EMAs high probability zones, because most of the time, price reacts when it touches them. Okay, now imagine this. The market is in a clear uptrend. The price starts falling and it's heading straight for the 60 period EMA. Most beginners panic, but not you. This is where you watch closely, because if the price touches the 60 period EMA and the CCI indicator is sitting in the oversold zone, that's below -100, then get ready. You might be looking at a perfect buy setup, but don't jump in just yet. Wait for the confirmation. If the price bounces off the 60 period EMA and starts heading back up, your next step is to check the CCI. Has it crossed above the 0 line? That's your green light. That moment right there is your high probability buy signal. Why is this so powerful? Because you're combining price action, momentum, and trend direction all in one clean setup. Your risk? Super low. Your reward? Potentially huge. Just remember, place your stop loss just below the 125 period EMA. This acts as your final safety net. If price breaks that line, the setup failed and you get out clean. But most of the time, this strategy wings big. And that's what makes this method so effective. It's simple, logical, and based on how the market really moves. No guessing, no complicated formulas, just clean signals using the powerful combo of EMA and CCI. Let's break down the next setup. Alright guys, now that you've mastered how to enter a buy trade using the CCI and EMA combo, it's time to flip the script. Let's talk about how to enter a sell trade using the exact same strategy, but in reverse. And trust me, this part is just as exciting because when the market starts falling, you don't want to just sit there. You want to know exactly how to profit from it. So buckle up, because this is where you'll learn to ride the downtrend like a pro. Step 1, just like before, we've got to figure out the best combination of EMAs. In this sell setup example, after running the same analysis process we covered earlier in this video, we've locked in 3 powerful EMAs. The 40 period EMA, the 120 period EMA, 350 period EMA. These aren't just random settings. They've been tested, back tested, and they work like a charm in bearish conditions. Now, take a look at this chart. Notice how the market respects the 40 and 120 period EMAs like they're magnetic fields. Prices keep bouncing off these lines again and again. That's why we call them high probability zones. They show us where the market is most likely to react, and this helps us predict moves before they happen. Let me break this down with a super simple real example. You can see here the market is in a clear downtrend. This is key. Then price starts to pull back and climbs up toward the 40 period EMA. At the same time, the CCI indicator also rises, pushing all the way into the overbought zone, which is above the plus 100 level. Now, this is where you need to pay close attention. Once price hits that 40 EMA and starts to fall, the CCI begins to drop too. And as soon as the CCI crosses back down below plus 100 and then breaks below the zero line, that's your moment. That's your high probability sell signal. You need to enter the trade right there, no hesitation. And don't forget, this part is crucial. Always place your stop loss just above the 120 period EMA. That's your backup line. If price crosses above that, the setup is invalid and you exit the trade. But most of the time, the market continues downward and the trend accelerates, and that's where the profit comes flying in. This strategy is insanely simple to use, but the accuracy, crazy high. Why? Because it's a 100% mechanical system. No guessing, no emotions, just clean rules-based decision making, like flipping a switch on a machine. And here's the best part. Even figuring out the right EMA settings isn't hard, because earlier in this video I already showed you exactly how to do it step by step. So if you've ever felt lost or confused about what makes a trading strategy truly accurate, that confusion ends right now, because by the end of this video you're walking away with one of the most powerful trading systems out there. Whether you trade Forex, stocks, or even crypto. Now get ready, because what I'm about to show you is like strapping a turbo engine onto an already powerful car. So far, we've proven that the combination of CCI and custom period EMA lines is an incredible strategy. Like seriously, if you only used that, you'd already be ahead of most traders. But what if we could take that solid system and make it even sharper, even more accurate? That's where the MAGIC-GRAIL histogram comes in, and it's a total game changer. But hold up, I'm not asking you to overload your chart with a dozen indicators like spaghetti on a plate. No, no, no! That's a recipe for disaster. The more complicated your system gets, the harder it is to follow. And if you can't follow it, you start making emotional decisions. And emotional trading, that's how accounts get wiped out. So in this strategy, we keep it clean. We use just one part of the MAGIC-GRAIL, the histogram, that's it. No signal line, no extra noise, just the histogram bars and their position relative to the zero line, or what we call the neutral level. Now here's how it works. Let's say the market is in a strong bullish trend and suddenly the CCI drops deep into the oversold zone below minus 100. You might be tempted to think the market is crashing, but not so fast. Before you panic, look at the MAGIC-GRAIL histogram. If those histogram bars do not drop below zero, that's a clue. It means the market is still holding strength, even if price is pulling back a bit. That's your confirmation that the bulls are still in control. Now, watch what happens next. As the price starts bouncing and the CCI shoots back up and crosses above the 0 line and the MACD histogram turns green or blue, boom, that's your high probability buy signal. In simple terms, the MACD histogram acts like a radar telling you if the trend is still strong underneath the surface. So even if the price dips, you'll know whether it's just a small retracement or a real reversal. And if the MACD histogram stays above 0 during a dip, it's like the market whispering, relax, we're still bullish. This is what gives you confidence to act, to pull the trigger when it matters most. No second guessing, no hesitation. And when you combine that with your EMA and CFI signals, you're not just entering the market, you're doing it with precision, with power, and with discipline. So the bottom line? The MACD histogram isn't just a filter, it's a profit booster. It makes sure you only take trades when the odds are really stacked in your favour. And when the market is in a strong bullish trend, this signal is like catching a rocket before it takes off. And the best part, this setup works for Forex, crypto, stocks, you name it. Let's move on and break down how to use this same setup in a bearish market. And yes, it's just as powerful. Alright, now let's flip the playbook, because everything you just learned about bullish trades also works perfectly in a bearish market. And honestly, this is where things get even more exciting, because in a downtrend, you can make serious gains if you know exactly when to jump in. So here's how you do it. Let's say the market is trending down hard. The price starts rising for a moment. It's a pullback. And the CCI line moves up into the overbought zone, which means it goes above plus 100. Now, most beginners would think, oh no, the market is reversing, but not you, because you've got the secret weapon, the MACD histogram. Here's the trick. Even though the price is rising, if the MACD histogram doesn't cross above the 0 line, that's a strong signal that the overall trend is still bearish. It's like the market is faking a move up, but underneath, the bears are still in charge. This is your key to get ready. Now watch this. As soon as the CCI line starts dropping back down and crosses below the 0 line, and at the same time your MACD histogram turns red, blue, that's your sell signal. High probability, low risk, and insane potential for profit. Why does this work so well? Because the MACD histogram acts like a radar. It's checking whether the trend is still strong. And if the trend is strong and bearish, that's when your sell entries are most likely to win big. No guesswork, no overthinking, just clean mechanical decision making based on how the market actually moves. And the best part? This strategy is super easy to understand and even easier to apply. Like seriously, you don't need to be a pro coder or some Wall Street analyst to use it. Everything is visual, simple, and based on what you can literally see right on your chart. As you've already seen in the previous examples, this strategy works incredibly well, not just for Forex, but also for crypto, commodities, and even stocks. It's one of the most productive strategies out there if you want to catch fast moves with high accuracy. Now, here's the bonus. All the indicator settings are used in this video. I've already dropped them for you in the description. You'll find a ready-to-use template file you can download and apply instantly to your chart. It auto loads everything, the EMA lines, the CCI, the MACD histogram. No need to set it up manually. Just plug it in and you're good to go. And hey, if you learned something new today, or if this video helps you understand trading in a way that finally makes sense, don't forget to smash that like button, subscribe, and ring the notification bell so you don't miss the next power-packed episode. Thanks for watching, and I'll see you in the next one, where we'll break down even more strategies that could change the way you trade forever. Let's go!